Greetings and a warm welcome to the One-Eyed Monkey channel, your go-to hub for the latest tech news, insightful how-to guides and unbiased reviews. Today we are going to delve into a particularly exciting topic: how to make money with stock options trading. A topic that is thrilling as it is rewarding. Our journey will take us from understanding stock options all the way to strategies for effective risk management. So fasten your seatbelt as we dive into the world of stock options trading. Before we delve into trading, we need to understand what stock options are. Think of stock options as a contracted deal between two parties. This contract gives the buyer the right, but not the obligation, to buy or sell a stock at a specific price, known as the strike price, by a specific date, known as the expiration date. Now this is where it gets interesting. There are two types of stock options: call options and put options. A call option is like holding a golden ticket. It gives you the right to buy a stock at the strike price anytime until the option expires. Let's say you have a call option for a tech company stock at $50 set to expire in a month. If the stock price soars to $80 within that month, you can buy the stock at $50 and sell it immediately at $80. Now that's a profitable deal. On the other hand, a put option is like an insurance policy for your stocks. It gives you the right to sell a stock at the strike price until the option expires. Imagine you own a stock that's currently at $70. You're worried the price might plummet, so you buy a put option with a strike price of $65. If the stock price does drop to $50, you can still sell it for $65, protecting yourself from a larger loss. Remember, the beauty of stock options is in the choice they offer. You're not obligated to buy or sell. You have the option to do so. It's a strategic tool allowing you to speculate on the direction of a stock's price, hedge against potential losses, and potentially reap considerable profits. Now that we have a basic understanding of stock options, we can explore how to make money with them. To start trading, we first need the right tools and platforms. As with any endeavor, having the right equipment in your arsenal is essential to success in the world of stock options trading. This means selecting a trading platform that aligns with your needs and goals. When choosing a trading platform, it's crucial to consider several factors. These include the platform's interface, the ease of use, the tools it offers to help you analyze and make trades, and of course its fees. A good platform should provide a balance of functionality and accessibility, allowing you to navigate the market with ease while also offering advanced features for more and nuanced trading strategies. One search platform that strikes this balance well is the TigerTrade app. What's that TigerTrade apart is its attention to detail, and it's focused on providing a comprehensive trading experience. It offers a wealth of tools for analyzing stocks, including real-time data, comprehensive charts, and insightful market commentary. This means you can make informed decisions based on the latest information, rather than just relying on guesswork. But what truly sets TigerTrade apart is it inclusively. Unlike many platforms that limit their services to those within the U.S., TigerTrade opens the door to international users. This means you can trade U.S. options from outside the U.S., breaking down barriers in offering you a wider range of investment opportunities. Setting up on TigerTrade is straightforward. Simply download the app, create an account, and you're ready to start exploring the market. Remember, trading is not a race. Take your time to familiarize yourself with the platform, learn about the various tools at your disposal, and understand how to use them effectively. So if you've got your trading platform set up, excellent, you're now one step closer to diving into the exciting world of stock options trading. Remember, knowledge is power, and the right platform is your gateway to accessing the information you need to succeed with your trading platform. Set up, you're ready to start trading. The journey may be challenging, but with the right tools and a little determination, the world of stock options trading is your oyster. Choosing the right stocks is the first step in stock options trading. Now this is no small task, but with the right approach it can be done effectively. Let's talk about volatility when you're dealing with stock options. Volatility as your friend. High volatility means larger swings in stock prices, and that can translate into greater profits if you play your cards right. So keep a keen eye on the volatility index and don't shy away from those stocks that might seem a little unpredictable. Next up, we have market trends. You probably heard the old adage, the trend is your friend. Well, it's an old adage for a reason. Understanding and following market trends can help you predict the direction of stock prices, and that's crucial in options trading. Are we in a bull market with stocks generally on the rise, or is it a bear market where prices are falling? These broader market trends can heavily influence individual stock prices, and you'll want to take them into account when choosing your stocks. Now let's talk about company performance. It's essential to understand the financial health of the companies you're considering. Look at their earnings reports, their debt levels, their revenue growth. Are they innovating in their industry? Are they beating their competitors? These factors can significantly impact a company's stock price and hence the value of their stock options. And let's not forget about news and events. Company news, industry developments, economic reports, political events, all of these can cause sudden shifts in stock prices, so stay informed, stay updated, and be ready to react swiftly. Finally, remember that choosing the right stocks is as much an art as it is a science. It requires patience, research, and a willingness to take calculated risk, and most importantly, it requires you to stay disciplined, to stick to your plan, and not let emotions cloud your judgment. Once you've chosen your stocks, it's time to decide on your trading strategy. But that's a topic for another day and another video. For now, happy trading. There is several strategies one can use in stock options trading. Let's dive into a few of these strategies. We are buying calls. This is one of the most straightforward strategies in options trading. When you buy a call, you're essentially betting that the price of the underlying stock will rise. Do you have the right, but not the obligation, to buy the stock at a predetermined price known as the strike price before a specified date? If the stock price rockets past the strike price, you're in for a sweet profit. If not, your loss is limited to the premium paid for the option. Next, we have selling puts. This strategy is essentially the opposite of buying calls. When you sell a put, you're wagering that the price of the underlying stock will stay above a certain level until the option expires. If you're right, you keep the premium received from selling the put. If you're wrong and the stock price falls below the strike price, you might have to buy the stock at a price higher than its current market value. But hey, no risk, no reward, right? Moving on to covered calls. This is a strategy often used by traders who own stock and believe its price might not move significantly in the near term. In this case, you'd sell a call option on that stock. If the stock price stays below the strike price, you keep the premium from selling the call and continue holding your stock. If the stock price rises above the strike price, your stock might get called away, but you still profit up to the strike price plus the premium received. Lastly, we have protective parts. This strategy is like an insurance policy for your stock portfolio. If you own a stock and are concerned about a potential drop in its price, you can buy a put option. If the stock price plummets, the value of the put option could increase, helping offset the loss from the stock. If the stock price stays above the strike price, your loss is limited to the premium paid for the put. It's important to note that these are just a few of the many strategies and options trading. Each strategy comes with its own set of risks and rewards, and it's crucial to understand these before diving in. Additionally, the right strategy for you might depend on a variety of factors such as your risk tolerance, market outlook, and the specific stock involved. Knowing the strategies gives you the flexibility to adapt to various market conditions. And remember, the key to successful trading is not just about picking the right strategy, but also about managing your risks effectively. But that's a topic for another day. For now, happy trading. While stock options trading can be profitable, it also comes with risks, and these risks are not something we can afford to ignore. In fact, the best traders in the world are not those who only make the best trade, but those who also manage their risks effectively. So let's dive into the world of risk management and options trading. First, let's talk about stop-loss orders. These are orders placed with a broker to buy or sell once the stock reaches a certain price. Think of it as your safety net, catching you when the stock prices fall too far. Setting a stop-loss order can help you limit your losses and protect your game. It's like an insurance policy for your investment. However, stop-loss orders are not the only line of defense. Diversification is another key strategy in risk management. Don't put all your eggs in one basket. Spread your investment across different stocks. This way, if one stock performs poorly, it won't wipe out your entire portfolio. Diversification reduces your risk by spreading it across multiple investments, but managing risk doesn't stop there. You also need to consider how much you're willing to risk on each trade. A common rule of thumb is not to risk more than 1 to 2% of your total trading account on any single trade. This helps to ensure that even if the trade goes wrong, it won't significantly impact your overall portfolio. Another strategy is to always have a clear exit strategy. Know when to cut your losses and when to take your profits. This way, you can avoid holding on to losing trades for too long or selling winning trades too soon. Lastly, remember that education is your best tool for risk management. Stay informed about market trends and changes, and never stop learning about new strategies and techniques. In conclusion, risk management is not about avoiding risks altogether. It's about understanding these risks and making informed decisions to mitigate them. Proper risk management can help protect your investment and maximize your profits. And that, dear listeners, is a key aspect of successful stock options trading. We've covered a lot today, so let's quickly recap. We kicked off our journey into the world of stock options trading by understanding what stock options really are. They're contracts that provide you the right, but not the obligation, to buy or sell an underlying asset, in this case a stock, at a predetermined price before a specific date. They come into flavors: call options and put options. Call option gives you the right to buy a stock, while a put option gives you the right to sell a stock. Next, we discuss setting up for trading. We identified the Tiger Trade app as an excellent platform for trading U.S. options. Even for those residing outside the U.S., it's a versatile app that provides real-time market data and a simple interface, making it easy to navigate for both beginners and seasoned traders. Choosing the right stocks is the next crucial aspect we looked at. Remember, not all stocks are created equal. We emphasize the importance of thorough research analysis before picking a stock. Consider factors like the company's financial health, market trends, and the overall economic environment. It's also essential to diversify your portfolio to spread the risk and maximize potential returns. Then we drove into trading strategies. We explored a few common ones like buying calls, selling puts, and protective put. Buying calls when you're betting that the stock price will rise. Selling puts, on the other hand, is a strategy used when you're expecting the stock price to stay the same or increase slightly. And a protective put is used when you want to limit your potential loss in case the stock price drops. And finally, we touched upon risk management. This is a vital part of any trading strategy. We talked about setting stop-loss orders to limit potential losses and using limit orders to secure profits when the stock reaches a certain price. We also discussed the importance of only investing money you can afford to lose and not getting carried away by emotions. But remember, these are just the basics. The world of stock options trading is vast and dynamic. It's a game of strategy, and the more you learn, the better you'll get at it. It requires patience, discipline, and continuous learning. You'll need to stay updated with market trends, economic news, and changes in company fundamentals. And most importantly, don't forget that every trade won't be a winning one. There will be losses, but don't let them discourage you. Instead, use them as learning opportunities. Analyze what went wrong, make adjustments, and come back stronger. It's a journey filled with highs and lows, but with the right mindset and strategies, you can make it a rewarding one. Remember, stock options trading requires patience, discipline, and continuous learning. Good luck and happy trading.